Welcome to the deep dive. Today, we're really digging into something quite complex. The ripple effects of U.S. tariff policies, both potential and existing on Malaysia's stock market and, well, its whole economy.
Yeah, and we're basing this on a really interesting YouTube transcript from Yerntran Dor.
That's right. And importantly, it was recorded just before April 2nd. Now, that was a date some were almost calling U.S. Liberation Day, expecting big tariff news.
Exactly. Announcements were anticipated for trade with Canada, Mexico, global partners, and specific sectors too, like semiconductors, cars, medical stuff, big stuff.
So the video's perspective is key here. Is this just, U.S.-China trade war 2.0, or is it something bigger?
Well, that's the crux of it. The speaker suggests it's morphing into a much broader, maybe global trade conflict, very different from the 2018-2019 situation.
Which makes understanding those differences absolutely vital.
Definitely. Our mission today is to unpack how these potential U.S. tariff moves might hit different parts of the Malaysian market, especially compared to that first trade war, and, well, pinpoint potential winners and losers for you.
Okay, let's jump right in then. How's the Malaysian stock market actually reacting this time around? The video suggests it's taking it harder than before.
Yeah, that's a key observation from the speaker. The market seems more nervous, maybe heavier, than during the 2018-2019 period.
Which is interesting because back then, Malaysia almost benefited in some ways. There were the supply chain shifts.
That's exactly right. It was a bit of a curveball. During that first U.S.-China trade war, Malaysia kind of found itself in a sweet spot.
How so?
Well, companies were looking to shift production out of China to avoid U.S. tariffs, right? So Malaysia became this attractive alternative for manufacturing, for assembly.
Leading to more exports for them.
Precisely. It boosted their manufacturing, their exports. The speaker used that phrase, sayayo, which kind of means, finding opportunities on all sides, benefiting from the situation.
Okay, but the vibe now is totally different. The speaker talks about being attacked from both sides. That sounds pretty rough.
It paints a stark picture, doesn't it? And it forces us to look at how the U.S. trade strategy itself might have changed.
Because the initial focus, say during Trump's campaign, was very much China-centric.
Very much so. Trade imbalances with China were front and center. But since January 2025, the tariff policies seem to have broadened out. They're targeting a wider range of major U.S. trading partners now.
And that's where Malaysia gets pulled in more directly, this idea of being seen as what was the term, a washing station?
Exactly. That's the concern highlighted in the video. The U.S. perspective, it seems, is shifting.
What does that perspective really mean, though, being a washing station?
Well, the worry from the U.S. side, as the speaker explains it, is that even if final assembly happens in, say, Malaysia, the core technology, the valuable components, might still be coming from China.
So basically just rerouting Chinese goods to dodge tariffs.
That's the suspicion, yeah, that these Southeast Asian countries are being used to, let's say, relabel goods. And the video notes that Malaysia's Deputy Minister of International Trade and Industry, YPU, has actually addressed this.
Oh, what did he say?
He emphasized that Malaysia needs deeper integration. Foreign investment needs to genuinely merge with local manufacturing capabilities. It's about proving real local value add, not just being a final stop.
To avoid that washing station label and the tariffs that might come with it.
Precisely. It's about showing substance throughout the production chain.
Okay, so that shift in perspective is critical.
Yeah.
Let's look at specific sectors now. Semiconductors seem to be taking a big hit, according to the video.
A significant hit, yes. The speaker points to a pretty dramatic fall in the Malaysian Technology Index, something like 30% between January and mid-March 2025.
Wow, 30%. That's substantial, below 2022 lows even.
Yeah, it signals real anxiety in the market. And a big part of that is the worry about potential global U.S. tariffs on semiconductors.
Because the U.S. is such a huge buyer of electronics.
Exactly. The biggest consumer. So if tariffs hit semiconductors globally, it could really squeeze demand for all sorts of electronic goods.
But what about things like AI, data centers? Isn't that supposed to be driving demand? You'd think that would list the Malaysian sector.
You would think so, but it seems counterintuitive, right? The speaker highlights that the recovery in Malaysia's semiconductor space, which is mostly packaging and testing, not the really high-end chip making, has been, slower than expected.
So the AI boom isn't quite translating.
Apparently not as strongly as hoped for these specific Malaysian players. And looking back at the 2018-2019 trade war gives us some context.
How so?
The Philadelphia Semiconductor Index, a key global benchmark, actually stagnated or even fell during that period. It shows how tariffs, even in growth areas, can really dampen overall demand.
Okay, that makes sense. Let's switch gears to electronic manufacturing services, EMS. The speaker mentioned widespread stock price drops there, too, in March 2025.
Yes, definitely.
Yeah.
Companies like VS Industry, Weisheng Industrial, they saw notable declines.
And any specific reasons cited?
Well, Weisheng Industrial is a good example. Their latest quarterly profit was apparently the lowest in 3 years, and the company itself pointed to global tariff uncertainty.
Saying it could lead to order delays or even cancellations.
Exactly. The fear is basic economics, really. If tariffs push up the final price of goods going into U.S., consumers might buy less.
Which means fewer future orders for the Malaysian companies making those goods.
Precisely. It hits their pipeline.
The speaker also brought up the bankruptcy of iRobot, the U.S. vacuum cleaner company. How does that fit in?
That's presented as kind of a cautionary tale, perhaps. It shows the intense competition coming from Chinese manufacturers like Xiaomi, who are making similar products but often at much, much lower prices.
So it adds another layer of pressure on Malaysian EMS firms.
It could, yeah. If the international brands they manufacture for are losing ground to cheaper Chinese alternatives, and then you add U.S. tariffs potentially making those international brands even more expensive.
It shrinks the market for the Malaysian manufacturers.
Right. It really drives home that attacked from both sides idea. Potential U.S. tariffs hitting exports, and this intense Chinese competition hitting orders.
And this competition isn't just overseas, is it? The speaker mentioned Chinese brands becoming more prominent even within Malaysia.
Yeah, that's another dimension. These Chinese brands are often very good at mimicking global leaders in design and features, but they compete aggressively on price.
Like the examples given, vacuum cleaners, hair dryers.
And coffee machines, too, specifically mentioning Ukitech in that context. It creates this direct challenge for Malaysian manufacturers, not just for export orders, but potentially in their home market, too. It's pressure from multiple angles.
Okay, what about other export-heavy sectors? Furniture manufacturing came up? Primarily selling to the U.S. and Japan, right?
That's right. Highly export-oriented, so naturally, they're vulnerable.
If the U.S. slaps tariffs on furniture.
It could directly hurt their export volumes, which is, the core of their business. The speaker noted that Malaysian furniture stocks have been underperforming, suggesting investors are already worried about this risk.
It sounds quite challenging across several key sectors, but it's not all just waiting for the axe to fall, is it? Are there responses happening? Government actions?
Yes, and that's important. The video does mention some developments. For instance, Malaysia Airlines buying a significant number of Boeing jets.
How does that relate? Maybe a sign of broader economic confidence or perhaps a diplomatic angle.
Could be interpreted in different ways, perhaps signaling commitment to U.S. trade ties or just long-term planning. But more directly relevant is a statement from Malaysia's Minister of Investment, Trade and Industry, Wei Mi.
What did he say?
In a Financial Times interview, he apparently indicated Malaysia would cooperate with U.S. requests to better monitor the flow of NVIDIA chips through Malaysia.
Okay. That follows investigations into chips potentially being routed to China via places like Malaysia and Singapore, right? Especially high-end AI chips.
Exactly. So this signals Malaysia is willing to tighten controls to address those U.S. concerns about technology leakage and transshipment.
Seems like a proactive step, trying to get ahead of potential problems.
It looks that way. Increased regulatory checks by Malaysian trade authorities generally also point towards an effort to be seen as a reliable, transparent partner. It's possibly about mitigating the risk of those broad tariffs before they get announced, trying to show they're addressing U.S. concerns head-on.
Okay, amidst all this uncertainty and pressure, the speaker did highlight one sector that seems relatively insulated, the plantation sector, palm oil specifically.
Yes, that's presented as a potential safe haven, relatively speaking.
Why is that? How are they dodging the tariff bullet?
Well, the key thing is the U.S. doesn't really import much Malaysian palm oil. They have their own massive soybean oil production, which is a direct substitute.
So U.S. tariffs on palm oil aren't really a direct threat to Malaysian producers.
Not in the same way as for, say, electronics or furniture. Plus, currently, crude palm oil prices are quite high, around RM 4,800 per ton mentioned in the video.
Which means good profits for the plantation companies.
Right. So you have this combination. less direct tariff risk, and strong current profitability. That's made plantation stocks look pretty resilient over the past couple of months, a sort of safe harbor for investors nervous about the broader trade situation.
Okay, so let's try and pull this together. As we wrap up this deep dive, the picture for Malaysia is, wow, it's complicated. Very different from the last trade war.
Definitely. The economy, the stock market, they're navigating a lot of uncertainty from these evolving U.S. tariff policies. It's not the opportunistic environment they saw back in 2018, 2019.
Key sectors like semiconductors, EMS, they seem particularly exposed, facing that double whammy, potential tariffs and increasing competition from China's manufacturing prowess.
That's a huge challenge. But as we discussed, there are counterpoints. The Malaysian government is making proactive moves, engaging with U.S. concerns.
And certain sectors, like palm oil, are showing resilience, offering maybe some stability amidst the turbulence.
Exactly. It's a very fluid situation, something that really needs close watching as these global trade gears keep turning.
Absolutely. And for you listening, getting a handle on these complex interconnections is, well, pretty crucial for navigating the investment landscape today. It really shows how interconnected everything is.
Which brings us to a final thought, maybe something for you to ponder. Given Malaysia's position, sort of caught between these giant economic powers and facing these shifting trade dynamics,
Yeah.
how might Malaysia need to adapt its own strategies, thinking about diplomacy, but also maybe boosting domestic innovation? How does it not just weather these storms, but maybe even find new ways to gain an edge in this changing global economy?